Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. Are you looking for solid investment opportunities without overpaying? In this video we are going to talk about 5 fairly valued stocks that deserve a spot on your watch list. Whether you are a seasoned investor or just starting out, these picks could be your next big move. Especially what is happening in the market right now, where we see a little bit of volatility. These companies might come down to our fair, either become really undervalued, okay, or stay in that fair valued spot. I do own some of the companies in this on this list today. I will tell you exactly what I'm going to do moving forward, inshallah. And this is one of those things where we've seen a lot of volatility in the stock market, especially if you look at just the last month, for example. Okay, we are almost flat. But when you look at last 6 months, okay, this is the S&P 500, we're seeing about 10% growth in the last 6 months. A year to date, we're up 27%. So that's just the S&P 500. But also we've got the Dow Jones that's up almost 15%. We've got the Nasdaq Composite, which is up about 36%. And FTSE 100 about 5%. Of course, as always, it has underperformed. Now, so there are opportunities basically coming up. Hopefully in January, February, maybe we might see a pullback in the market. We might see some sort of a correction. Correction is normally where a situation where, for example, we see 10 to 20% down on the stocks basically, which will be absolutely amazing, because right now we are up 27%. And last year, I think we were up about 19% and so on. So for the last 2 years, we are up a lot, especially if you look at the S&P 500, okay, 26% basically for the 1 year. This one doesn't give you for the 3 years. I wish it did. But for the last 5 years, we're looking at about 86%, which is absolutely crazy. So these are the type of companies that are on my watch list, just in case we see a drop in the market, so I can add to it, inshallah. But before we do that, I just want to talk about a couple of things. Right now, the fear and greed index basically measures what investors are feeling right now. What is the momentum right now? Are people happy to buy stocks and is everything euphoria and so on? Or are people fearful? Are they scared? And right now we are here. I'm hoping we will get to extreme fear in the next few weeks, months, because that's when you should be buying stocks. You should not be paying high prices for these high quality businesses, because you've seen yourself, a lot of you, especially if you have been investing for quite some time, when you buy stock and it basically very overvalued and it goes down 10%, 15%, it corrects to its fair values, okay, the intrinsic value, then that means that company is going to stay there for quite some time until there's another momentum, something else happens within the company that's going to push it again over valuation, or the entire market goes up. So it's really important to understand why we always talk about buying companies when they're actually fairly valued, or when they are actually undervalued. Basically, overpaying for stocks, it can be very, very dangerous. So just bear that in mind, inshallah, when we move forward. Now, before I start the video, I just want to talk about a couple of things, and that is, if you can join us at the Patreon account, it genuinely helps a lot. You can check out all the buys and sells. You can see all the exclusive videos that are exclusive content that I actually create for the Patreon account. Also, you can join on the Discord, where you got a lot of brothers and sisters who are sharing very good practices on a daily basis. Again, apologies for my voice is still all over the place. I'm recording the second video for the day. I'm actually talking about moving forward, inshallah, if my voice gets better in the next couple of days. I have planned quite a lot of videos basically that are actually needed within the community right now. So things like, we're going to talk about a lot about ETFs. We're going to talk about in different types of format. We're going to talk about a lot of high growth companies. We will talk about, of course, the dividend companies as well. And then there are a few things that I've learned over the years from reading different books, talking to different people, and I want to share that with the community, inshallah. So I've done some sort of a very kind of overview or plan for the next few days and weeks, inshallah. So if you are new to the channel, of course, welcome. If you're not, basically have not subscribed yet, please subscribe, like the videos and do whatever else, inshallah, you can do to support the channel, inshallah. Right, moving forward, First company we're going to talk about today is Linde. This is one of the material companies out there. They do with a lot of different types of gases. Whenever I say that, always just makes me laugh, which is crazy. So they've got industrial gas company. That's basically what they are. They operate in a lot of different countries. I went to Greece a couple of years ago. I actually took pictures. Not a couple of years ago. It was only last year that I went to Greece, and when we did it, and we went to, basically my friends and I went to a factory, and that factory basically was a company that makes milk, whatever, and a lot of their devices were made by this company. And I was like, yay, actually I do invest in the company. So yeah, they basically deal with all of those chemicals in basically different types of industries basically. So it serves the different wide ranges of industries, including healthcare, chemicals, energy, manufacturing, metals, mining, food, beverage, all of these things basically. Okay, and as you can see, a year to date the stocks are only up about 3%, 6%. We've seen already the S&P 500 a year to date is absolutely killing it and is up about 27%, but this stock is only up about 3-4%. For the 1 year it's about 3 points, just about almost 4%, and for the last 5 years we're looking about just over 100%. Okay, so this is one of the reasons I thought let's have a look at this company in more detail. And as you can see here, it's fairly valued according to Morningstar valuation. $419 per share is where they think the price should be. Right now we're looking about 425, so it just needs to come down a little bit in the next few weeks. That'll probably be, and then it will become probably a undervalued and so on. Current dividend yield is 1.3, so it's not huge, but it's good starting point. 36% in terms of payout ratio, which is quite low. The 5-year growth rate, we're looking about 5%, which is fine. 32 years of increasing that dividend. Annually you get $5.56, and it's A+ rated when it comes to that safety. The 5-year growth rate revenue for the last compound annual growth rate is 12%, 15% when it comes to EPS. Profit margin, return on equity, return on invested capital, nothing to worry about. And the last, basically the free cash flow here is about $5 billion, which is really good. Last 10 years per annum should have received about 14% from this company when it comes to total return. That includes price appreciation as well as dividends. Revenue growth, basically they're expecting the revenue to grow about 5% next year, 9% when it comes to EPS. The next company we're looking at today is in this basically same sector, okay, and it's slightly smaller. So this one is 202 billion market cap. This one is only 65 billion market cap. I say only. They both have, of course, wide economic moat. This one is trading currently $296 per share, and as you can see, it's fairly valued at the moment. Now, dividend yield of 2.4%, the payout ratio of 57%, the 5-year growth rate of 9%, and the dividend streak of 41 years. So this one is a dividend aristocrat. This one is a dividend aristocrat, but is moving towards it becoming a dividend king probably in the next 9 years or so. Annually, you'll get over $7. And the A+ is basically the dividend safety rating. The 5-year growth rate for revenue for the compound annual growth rate is 7%. The EPS is 9%. Profit margin, return on equity, return on invested capital, nothing to worry about. Okay, what's happened here? Now, profit margin, return on equity, basically, and return on invested capital, nothing to worry about. But when it comes to free cash flow, this company has a negative $3.15 billion of basically negative free cash flow right now. So like I said before, I'm watching this company. I do own it in my portfolio. The basically is getting reduced in terms of free cash flow, negative side of things. The company has talked about basically growing free cash flow, which is good, but I want to check it out in the next couple of months or so. I'll let you know how it goes, inshallah. Total revenue, total return in the last 10 years, we're looking at about 9%. Revenue growth for the basic last 10 next year, we're expecting about 8%, which is absolutely huge. 10% when it comes to EPS, fairly valued again, $322 per share. Right now it's below that, so it's heading towards becoming a undervalued stock. And as you can see here is all buys. Quant is saying is a buy, Wall Street is saying is buy, Seeking Alpha is a buy. A year to date we're looking about 8%, and for 1 year basically we're looking about 8% as well. So nothing huge to worry about when it comes to this company. Hasn't done a lot and basically this year, but it's one of the companies that actually performed really well for me, and I'll share that with you at the end of the video. So stay tuned for that. I'll share all the companies that I own. I'll show you exactly how much I own and how much I'm up and down, inshallah. Next one is another one that I own as well, S&P Global, 152 billion market cap, wide economic moat, and current prices over just $500 per share. 480 is the fair valued price right now. Dividend yield is very small. However, they are growing that dividend, and they are growing it for the last 5 years about 10%. 51 years of increasing that, which means basically they become a dividend king. Annually, you'll get $3.64, another A+ rating from Seeking Alpha. The 5-year growth rate when it comes to revenue is an EPS 16 and 8% respectively. Profit margin and return on equity, return on invested capital, nothing to worry about. Over $5 billion of free cash flow right now. Total return in the last 10 years, we're looking about 19%, which is absolutely huge. Revenue growth is expected to be about 6% next year. EPS about 10%. Again, absolutely great company, right place, right now. So we'll see how it goes in the next few weeks. And double buy rating here, Seeking Alpha on Wall Street. A year to date, we're looking about 15% up. And 1 year about just 15%, which is absolutely fine. So we'll see how it goes. Another company that I own, and I will tell you exactly what I will be doing. Next one is the one that I do not own right now, but I used to at some point a while ago. Texas Instrument is one of the companies in the semis. It hasn't done as well as all the other companies, to be honest with you. Let's have a look. I was just looking at it earlier. Year to date is only up about 13%, whereas the S&P 500 you've seen about 27%. Nvidia's and all the other companies in that sector have done absolutely amazing job, but this one has not tagged along. But as you can see, it's actually all holds here. And about 13% when it comes to the price side of things. 170 billion market cap, so it's a huge company. Wide economic moat, $192 per share right now. 175 is the fair value price right now. About 3% when it comes to that dividend yield. The payout ratio is very, very high, which is interesting. In fact, I'm going to check this. I'm going to use Seeking Alpha. Yeah, it is 98%, which is absolutely ridiculous, because I was looking at it here as well. Is it the same? This website is slightly slow today. It's not having a great day. I'll come back to it later. Oh, here we go. Yeah, 98% basically right now. There's ways to calculate it, but I can't be bothered. 5-year growth rate, we're looking about 10%. Dividend streaks of 19 years, $5.44. Dividend safety right now is A. Rated 5-year. When it comes to the 5-year growth rate in terms of dividends, in terms of revenue and EPS, 2%, 5%, which is not great. Profit margin, return equity, return on invested capital, absolutely amazing. $1.4 billion of free cash flow, total return 15% in the last 10 years. Revenue expected to grow by 11%, 17% for EPS, fairly valued, like I said already, and we've seen already how much it is up and down. Next one is final one that I'm going to talk about today is Qualcomm, another company that I own in my portfolio, almost 170 billion market cap. Right now they're saying 180 is the price they expected this to be the fair value right now. Right now is $160 per share, so that's about $20 less than where it should be, basically where the fair value price should be. So if we see another 2-3% drop, this might become a basically undervalued stock. You get dividend yield of 2.2%, which is absolutely huge. Payout ratio is only 32%. The 5-year growth rate 6%, and 21 years of increase in that. So they just need another 4 years to become a dividend king, aristocrat. $3.40 is what you will get. A- is what you get for dividend safety side of things. Revenue grew about 12% last 5 years. EPS about 19%. Profit margin, return on equity, return on invested capital. There's not that many companies that can do this, which is absolutely amazing to see. $11 billion of free cash flow right now. Total return basically for the last 10 years, we're looking at about 9%. Revenue is expected to grow about 6%. EPS about 10%. So another great company. Look, to be honest with you, this is probably one of the best companies out there when it comes to the semis side of things. I do own all, basically apart from this one, all 4 the other 4 companies, and I'll show you exactly what I will be doing moving forward. Now let's have a look at the last 5 years, how these companies have performed. This is total return we're looking about. 93% for S&P Global, the S&P 500 about 87%, Linde we're looking at about 116%, 41% when it comes to automatic data processing. I always get confused between APD and ADP. Air Product and Chemicals, Qualcomm 100%, and Texas Instruments 72%. And when we look at the last 10 years, look at this, 528, just about, let's round it up to 200, right? 290, 176, 184. So these two underperformed the S&P 500. The rest of them are outperformed the S&P 500. So this is, to me, to be honest with you, this is very high quality stocks. And in the long run, this is the type of businesses that I want to own more of. So my plan is, to be honest with you, these three, so this one here, the S&P Global and Qualcomm, all of them are on my watch list for the next few weeks. And if they drop, I will be buying more, inshallah. Now, final thing I'm going to do is show you the Shariah compliance side of things. I get this information from Zoya. I have no affiliation, so that basically you could do the calculation yourself. To be honest, you don't really need them. But there you go. That's basically what they're saying currently. But that's the 5 companies I wanted to share with you guys. It takes a lot of time and effort to put these videos together, despite even me not having a great voice today, and apologies for that. I'm going to give it a go, and inshallah send this on your way. And again, if you can join us the Patreon account, it will genuinely help the channel, inshallah, in the long run. Final thing is just to show you guys these holdings. So I'm going to go on this one. So the first one we're going to talk about is S&P Global. You can see it there. It's basically over £6,000 right now, or I'm up about, let's say, 40%. The next one is this one here, about 21% up, Air Product and Chemicals. Qualcomm about 30% up right now. And then we have one more to go, this one here, about 5% up. So this one has come down quite a bit. So for that reason, I would actually like to buy more of, inshallah, if it comes back down at least another 4-5% and it goes into my average price right now, inshallah. I hope you enjoyed the content. I hope you enjoyed the transparency and everything else we're trying to do here. If you are, please like the video, subscribe to the channel. Have a wonderful day. Assalamu Alaikum.